In November, prices for a diverse array of goods and services experienced a slight uptick, aligning with expectations and providing a measure of relief for the Federal Reserve. According to the latest report from the Labor Department on Tuesday, the Consumer Price Index, CPI, a crucial metric for gauging inflation, registered a modest 0.1% increase in November, with a corresponding 3.1% rise from the preceding year. This closely mirrored the projections made by economists surveyed by Dow Jones, who anticipated no gain and a yearly rate of 3.1%. Although the monthly rate indicated a mild increase from the flat CPI reading in October, the annual rate demonstrated a marginal decline after reaching 3.2% a month earlier. The core CPI, which excludes the influence of volatile food and energy prices, exhibited a 0.3% increase on a monthly basis and a 4% rise from a year ago. Both figures were consistent with estimates and demonstrated minimal change from October. While the November figures still surpass the Federal Reserve's 2% target, they also underscore continuing progress in mitigating inflationary pressures. Policymakers often place more emphasis on core inflation as a signal for longer-term trends. Despite being somewhat in line with expectations, Liz Ann Saunders, chief investment strategist at Charles Schwab, suggested that the report might not be as optimistic as some had hoped, indicating a desire for more pronounced deceleration on a month-over-month basis. She speculated that the Fed is likely to view the ongoing disinflation as positive news. Following the release, the reaction in financial markets was relatively subdued, with Wall Street opening with minimal changes and major indexes slightly negative in early trading. Treasury yields experienced a modest uptick. The moderation in inflation was partly attributed to a 2.3% decrease in energy prices, with gasoline falling by 6% and fuel oil experiencing a 2.7% decline. On the other hand, food prices increased by 0.2%, driven by a 0.4% surge in food consumed away from home. On an annual basis, food prices rose by 2.9%, while energy prices saw a decline of 5.4%. Futures markets suggest an expectation of aggressive easing by the Fed in 2024, with anticipated rate cuts of up to 1.25 percentage points by the end of the year. The outcome of the Fed meeting and its signaling for future monetary policy will likely influence market dynamics and economic expectations in the coming months.